I'm the founder of the company, and I resumed to be a CEO last year. That's roughly exactly a year ago. Well, it just seems that technology companies attract quite a lot of interest. So now we have less people. But within the horticulture industry, we also have quite a lot of technologies. That, we are very close to our everyday lives. I'm quite certain every one of you, one way or another, are our customers, because we are supplying to most of the salad and herb growers in Scandinavia. So that whenever you buy a pot of, say, herbs or salads, that's mostly have something to do with us. Well, that we are basically a production, manufacturing, and distribution company. Today, we operate 10 production facilities in China, in Poland, Denmark, in Kenya, and Vietnam. And then we are taking one step further, that from manufacturing, we're integrating to distribution. So actually, we do distribute ourselves in all major markets, which means we supply directly to growers. Therefore, we say our business is a growing business. We have, say, we regard two markets as our home markets. That's Scandinavia and China. And I'll explain why that we are there. The company is listed on, say, at Nasdaq First North. We want to be a leading supplier, we would say one-stop shopping suppliers or solution provider to the growers, especially professional growers in larger scales. And also that what we see, that we support our customers in growing their business, not only growing plants and pots and trees, rather we're growing their businesses. So from here you can see that we are actually supplying whatever you need to be able to grow a pot of salads, or a strawberry, or a herb, or onions, or cut flowers. So therefore that we have our production base in the major cut flower regions. If you look at the cut flower regions around the world, we can see South America, there's Colombia, Ecuador. There's one of the major production countries. And then we have, say, Africa, Kenya, say, Ethiopia. If you look at the European roses, roughly 90% or over 90% came from Africa, Kenya, and Ethiopia. And then in terms of, say, pot plants, we have our closest major market is Denmark, and also Sweden. In all Nordic countries, we have, say, pot plants production. And in terms of salad, herbs, in most countries, we have local manufacturers or producers. We call that plant factories, because this is a very modern facility. They produce salads, herbs around the clock, 365 days a year. We call it plant factories. So what we provide actually is from the start, how you build the greenhouses or build the plant factory, to supplying substrates, IoT, there's a lot of technology. We're collecting data and giving the analysis to our growers, how to facilitate the day-to-day management in terms of water supplies, nutrition, and so on. That's quite typical. Just I take one example of the Swedish markets, because there are some brands you might know. If you look at the professional markets, I know Svegro is just outside of Stockholm, one of the larger growers here. They produce 25 million pots of salads and herbs annually. Therefore, that Swedish market annually per capita consumes 11 to 12 plants annually. That's around, say, 120 million pots and trays. So here that we supply everything from substrates that you grow your plants, and we supply, say, bio fertilizers, nutritions, and pots and trays and packaging solutions. That's also the transport systems from the growers to retailers. And we also work with some of the wholesalers of the traditional reason, because we acquired a number of companies in the past. So we do have still a number of wholesalers. Wholesalers are supporting the traditional pot plant growers and the salad growers in the various regions. Master Green is a association of growers in Malmö with 54 growers. So these kind of customers we also support and are working with. Then we also have, say, a business within a home garden business. We acquired a company here in Stockholm last year. They're focusing on the retail chains. We supply, say, home garden products to Naito, Bauhaus, and so on, Plantation, and Buddhists. We have a number of brands based on different product categories. There's a historical reason that since we acquired a number of companies, some of the brands has been in the market for a very long time. For instance, Ovefi is a Norwegian company established in 1949. We kept developing those brands in the various markets. And here you can see that our geographic locations, we have 14 places in China, sales offices and manufacturing plants. And we have, say, in the Nordic countries. So here is giving the explanation why I described, say, Scandinavian and China as our home markets. That's strategically important for us, because here we have the concentration of customers and also sales. Also, we do see there's a huge potential continuously to grow, especially in the Chinese market. As I said, we are a manufacturing company. We started as a manufacturing company. So we have 10 production facilities. So there we have the product knowledge, we have, say, product development, we have, say, the control of workflow, and also ensure delivery times, which is essential because in the manufacturing, if you look at the growing business, which is very seasonal, and then that we need a very good, say, supply chain support our customers. So that the market is very big. What do we say? That's how you define the market. Of course, if you look at the whole supply chain, from facilities to consumables, that the market is very big. The largest single market within this business actually is the fertilizers. There we have a number of giants internationally. If you look at the Norwegian company, and also, say, some Chinese Canadian companies that are normally having a few hundred billion capitalizations. That's very big companies. However, if you look at, say, other products within the supply chain, we see a highly fragmented market. Therefore, there we see an opportunity to consolidate through acquisitions, merger acquisitions, and also our organic growth. If you look at, say, the company founded in 2006, after my time at the Swedish company, I was Asian manager for New Wave Group. That's a company maybe you're quite familiar with. So I started the company. Initially, it was quite a small scale, focusing on the Dutch market, and we're still enjoying quite a good market in the Dutch markets. But gradually, that I see the consolidation possibilities. So therefore, that we started to expand through merger acquisitions. That is since 2014, in November, we listed in Sweden. Because of the past experience I have with the Swedish companies and the Swedish stock market, that we decided to list the company over here. Looking the first quarter, we had to say 146 million in sales. It's a slowdown, simply because of we had a quite fast growth in the past few years. However, we see we have a lack of integration internally in terms of sales, marketing organizations. That's a number of companies that we acquired in the past still operating very much independently, that we couldn't see the synergies from the acquisitions. So therefore, starting from last year, after I took over again as a CEO, that's we started to, first of all, cutting costs, consolidating a number of functions, namely logistic purchasing, sales and marketing, and also in the financial parts that we're starting to consolidate. So therefore, that we in terms of growth, we have to slow it down compared to the past years. Operating profits, we had to say quite a remarkable improvements compared to last year. And operating profits EBIT, we did 6.3 million. It's also a quite a big improvement compared to last year. So if you look at, say, what are aiming for this year is really to consolidate and to reach our efficiencies in our operations, and also looking at, say, further possibilities in getting prepared for further growth. So last year we did, say, 530 million in sales. And there we can also see that we didn't make a good profit simply because of the lack of, say, consolidations in the operations. So there we are doing quite a lot of efforts now to consolidate our businesses. Yeah, as I said, focusing on profitabilities. Say we see still a very strong demand in all markets, especially in our home markets, say Scandinavia and China, and also that we see that we are dropping some unprofitable businesses. So this year, therefore, we won't see again the high growth that we have enjoyed in the past years. However, that we will do much more on the bottom line. And also we work actively regarding, say, biomaterials, that we started supplying a number of Scandinavian growers with biomaterial-based solutions, pulse and trace packaging materials, and so on. Well, that even though the world, say, turn around, that could be that because in the past year we didn't produce very good profits, so therefore that we are once again focusing on the profitabilities and without focusing on growth. That's focusing on efficiencies and the productivities within the company. And also we streamline and consolidate the different functionalities within the group. Yeah. Oh, sorry. Yeah, that's my short presentation. And if there's any questions?
Yes, thank you, Robert, for that presentation. And I have prepared some questions.
Yeah.
And the first one is, we know that 2018 was a tough year for the market. There was a lot of drought and heat and close to no rain in Europe.
Yeah.
And the industry suffered a lot from that. And also Oboya suffered a bit from this. And I was wondering, are there any fears that similar events could take place in the future? And how are you prepared for 2019? And what will be the main difference compared to last year?
That actually, if you look at, we have two parts of the business. Say we have our professional growers. If we look at our professional business, which accounts around 90% of our business, is not affected by any environmental issues because that's a facility growers. They always have ceiling above their heads. That's greenhouses. So that in our professional business it hasn't been affected. However, by looking at our home garden business, that's indeed last year was a very bad year because we don't have a lot of grasses in our gardens. So that has been an issue. But this year, I see that the first quarter and then also second quarter has been quite good within the home garden business.
Okay.
Yeah.
And also you stated that you want to focus more on profitability. And you have shown great growth last years.
Yeah.
And that might slow down a bit, but still it looks like compared to what you have shown previous years, it's been up to 20% growth or even more. And I was just wondering, what do you think is a sustainable growth rate for Oboya going forward and also sustainable margins?
Well, that we want to grow. I strongly believe that we can build a multi-billion companies, so that because the market is highly fragmented, that we have a solid base for future growth. So this year will be a year of consolidations. I strongly believe that we can achieve at least 20% to say consolidated growth over the longer period of time, combining organic and acquisitions. In terms of profitabilities, surely that we aim at least say 5% bottom line net profits.
Okay,
that's been our targets.
Okay.
Yeah.
And also, you're operating in a fragmented market that's under consolidation.
Yeah.
And what makes customers choose Oboya in front of other suppliers? What makes you stand out there?
Well, there are a number of developments. That first of all, growers are consolidating. The growers are getting bigger and bigger. If you look at there's a lot of number of markets, Holland or Denmark, the total area of growth, say glass houses, increased, but the number of growers actually shrinked quite a lot. So if you take Holland as an example, average grower is around 7 acres of glass houses. So those larger customers are having much better bargaining powers. They also want to have one-stop shopping solutions. They also have the volumes capable of supplied by manufacturers. In the past, they were smaller. They have to buy through wholesalers. But now the industry is changing. Also because of the internet and the transparency in the trade, also making as a manufacturer we have a number of advantages. As a manufacturer, that we can also supply a huge number of products to satisfy their daily production needs.
Okay, so it's possible to say that this has been a fragmented market that is now under consolidation.
Exactly.
And there are not many suppliers offering a one-stop solution.
We are quite unique as a manufacturer within the business.
Okay.
Yeah, very unique.
Okay.
Yeah.
And I mean, given this development, what would be the key to continue gaining additional market shares then?
Well, that we see that we are growing organically in a number of markets, and we also see there are numbers of acquisition possibilities. We evaluate constantly in a large number of, say, acquisition candidates. So I do see that that provides us a huge potential, both organically and also, say, through acquisitions.
Okay. I think that's all for me. Thank you very much for coming here today and presenting, Robert.
Thank you. Thanks. Thank you.